Good morning, everyone. Thank you for joining us today for this webinar on the NPL Secondary Market Directive. As Credit Village, we have closely followed the evolution of SMD since its very beginning. Through our magazine, our online website, and our events. However, this reform goes far beyond individual national market. It affects the entire European credit ecosystem. This is why we believe that now is the right time to share an overview of the current state of implementation across different countries and to engage in a constructive discussion looking ahead to the future of the non-performing loans market, considering risk, challenges, and above all, opportunities. Before we begin, I would like to sincerely thank you, our scientific partner, Prelios Innovation, and the friend Francesco Genti, who will be moderating today's panelist. I'll pass it over to him in a moment. A special thank you also goes to our strategic sponsor, Davis & Morgan, and its CEO, Andrea Bertoni, who with a forward-looking approach has already developed a service designed to support the market and the international operators, investor, and servicer. This service will be introduced in the video you are about to watch, Asset Finder, the new intelligence tool for NPL market. Thank you again for being to us today, and I wish you all a productive and engaging webinar. Thank you very much.
Asset Finding is a 360-degree ecosystem for credit acquisition, centralized position analysis, and data extraction, all in one place. Operational support for debt settlements and credit acquisitions, powered by Casa Italia team, and access to capital through financial solutions developed in partnership with Andrea Bertoni and Davis & Morgan. Whether you are a consultant, a real estate professional, or an investor, the rules have changed. We are among the first to leverage the new Secondary Market Directive and the authorization of Davis & Morgan to give you institutional access to the credit market, an opportunity that until now has been reserved for only a few. The new era of the real estate market starts here.
Thank you, Roberto. Good morning, everyone, and thank you for joining us in this webinar. I'm Francesco Genti, Director, Business Development at Prelios. Prelios is one of the largest NPL servicers in Italy with over 45 billion euros as asset under management. We are at a critical juncture at the European NPL market, and the Secondary Market Directive was designed to harmonize the secondary market, but as we see in the early 2026, the reality on the ground is probably quite different or slightly different. We will see later on whether we are far different or slightly different from what probably was expected by the European authorities. Due to that, today we will analyze whether these rules, the Secondary Market Directive, is really facilitating the market, the NPL market in all European countries, or it has become a new layer of bureaucratic complexity. In order to discuss these topics and to share their views and ideas and perspectives also on this interesting topic, we have an exceptional panel of leaders from across Europe. We have Klaus Spetzberg, which is the president of FENCA, which is the European Association of the all National Association of Collection Companies. Then we have Carlos Ruiz Cabrera from ANGECO, which is the Spanish Association of Collection Company. Then we have Michela De Marchi, Secretary General of UNIREC, the Italian Association of Collection Companies, and we are proud as Prelios to be part of. And we also have Georg Kovacs from Romania, president of the Romanian Association of Credit Management. As we said, we would like to discuss the Secondary Market Directive, the development of the market, the next steps, and what lies ahead in the next months. And due to that, I will give the floor to Klaus. Klaus, as president of FENCA, probably you can give us the best and the deepest overview of the situation and the application of the Secondary Market Directive overall Europe. What is your overall assessment of the reform more than 2 years after its introduction, at least at European level, even though some countries have not yet adopted the secondary market? Klaus, the floor is yours.
Thank you so much for the question, Francesco, and thank you to Credit Village for facilitating this important discussion. I think the overall impression is that the idea behind the NPL directive was good. We needed a development of the secondary market. However, there is a difference between the idea and the implementation. So if we look at the overall objectives of the directive, to develop the secondary market, make it easier for banks to sell their portfolios, make it easier for purchasers to find credit services, and also to create a common framework across the member states. The NPL directive has not lived up to that expectation. There are many challenges. Just to mention a few, the number of credit services are far fewer than they were before. We have to remember that a defaulted loan agreement, an NPL, is in reality a debt. So it falls under the category of debt collection. So if we look at the different member states, we will see a reduction in the number of credit services compared to where you have debt collection agencies. You will also see in especially those countries that had licensing systems on beforehand, it has been a deregulation and now a double supervisory authority. So what we are essentially looking at is a scenario where we have more administration, and administration has a tendency to drive up cost and make things more difficult. We have fewer market participants. So I think there are several adjustments that could be made to the directive to make it work a lot better than it's done today. Because finally, on top of that, it has been a very different way of implementing the directive in the different member states, and that has caused several problems. I'm certain that my colleagues in the industry will comment on some of them later on.
Yeah, unfortunately, or at least we are probably the first ideas or the first intentions from regulator, as we can see, or we will see during the webinar, and also we can see in reality, are probably not the one we all expected on the European market. We are now, or you spoke about countries where the Secondary Market Directive has already been implemented. But we have Carlos Ruiz with us from Spain, and probably Spain is in a quite uncommon, so to say, situation, due to the fact that, as far as we know, or as far as of yesterday, I would say, the Spanish government has not yet implemented the Secondary Market Directive in Spain, in your country. So technically, Spain is infringement as of 2026, as of today. Does this legal vacuum so create a risk premium for international investors? Do you think that this lack of legislation in Spain could prevent or could prevent some foreign or national investors from investing in the market? And in any case, what is the real situation in Spain? Why haven't you, as Spanish government, not yet implemented the directive? What are the reasons why you didn't so far? Carlos?
Thank you, Francesco. Well, first of all, the directive is not transposed yet. However, given the maturity and resilience of the Spanish market, I'm not aware of transactions that have been cancelled or collapsed solely because of the delay of the transposition. I think that Spain still benefits from a very professional servicing industry, strong operational platforms, and a long track record that gives confidence to investors. No? So I will not describe this situation as a market freeze. What I will describe is a market operating with caution and also in terms of price decisions. The reason behind not transposition is that there have been a lot of problems in the government, in the Spanish coalition in the government. Some projects have been delayed. One of the projects that have been delayed has been affect us. No? Where the delay has a very real impact is on internal implementation projects within our organizations. The lack of a final clear legal framework makes it difficult to design and develop and execute changes that the law will require. So, for example, the draft law still doesn't clearly define its temporal scope. We don't know whether it will apply to credits purchased after its entry into force or also to portfolios already acquired in the past. So this is not a minor technical detail. It changed the scale of implementation. No? Let's take the reporting obligation to the Bank of Spain as an example. We know that servicers will have to enrich the Bank of Spain's databases so that the supervisor can have visibility on the volume of NPLs in the secondary market. But today, we don't know which credits must be reported. We don't know from which date and under which exact data requirements. So we cannot build stable reporting models and compliance processes yet. So the same applies to control over third-party providers, internal governance frameworks, audit trails, and IT developments. So no responsible organization can commit significant resources without knowing the final legal perimeter. No? So finally, the delay, I think that has two consequences. Externally, it may increase the perception of a regulatory risk, which may affect to pricing on investment, and internally, it paralyzes the implementation projects. I think that it also generates inefficiencies, maybe creates some of fatigue in the sector.
So, as far as I understand, probably your expectation or your hopes is that the Secondary Market Directive will never, or hopefully never, implemented in Spain. So probably all the market or servicers have not to comply with these regulations, which, according to your ideas or experience or feelings, are too heavy, too tough for the Spanish investors.
Not exactly, because I think that the directive, according to our discussions with the different parties in the parliament, which is where the draft law is right now, it will be implemented. The point is that we are in the final stage of this government, and the point is there will be elections or not this year. If there is election, we start from zero. Okay. So let's see. The point is not the point is when it's going to be transposed, not if it's going to be transposed or not.
Yeah, but at least in Spain, due to the fact that you are still working on the transposition of the Secondary Market Directive, you probably can gain experiences from all other countries in which, in the meantime, already implemented the secondary directive, and try to make if any, not the same mistakes we did probably, and then I will pass also to Georg. Then we will you can gain experience from other European countries. Georg, you represent the Romanian market, and the Romanian market is quite regulated, so to say, and the market is also under intense scrutiny from regulators in Romania, but also from consumer associations and so on. The dual approval process between the central bank and the NAPC in Romania slowed down the time to market for the new portfolios. And how do you see also the fact that the consumer associations in Romania are so strong in regulating the market, or contributing in regulating the market in Romania? What's your idea on the implementation of the directive in your market, in your country?
Thank you for the question, Francesco. The Romanian market has been quite regulated since after the financial crisis. Before the financial crisis, the regulations was very, very thin. Afterwards, of course, with a high number of individuals being indebted and let's say exposed to various difficult loans, foreign exchange loans in euros or other currencies, and high interest loans, it was a push from the government and from the Consumer Protection Authority to regulate the market. It has happened, so the market is quite regulated, and we are governed by the Consumer Protection Authority. This is in Romania a very powerful authority, as it has the right to close down any business immediately. This is, of course, to protect the consumers, let's say, when they can be at harm. We can speak about the restaurant, which is bad hygiene, but it doesn't really work as well in our industry, but they have the same power. This of course, has made it a bit difficult, because it is the Consumer Protection Authority is using almost every possibility to add to any legislation coming from the EU level. We are now looking at the Consumer Credit Directive, the CCD. Already here, there are some extra add-ons saying, for example, they're trying to put in that debts above a certain level, unsecured, cannot be executed anymore. Yeah, so you cannot foreclose anymore. This is their proposal. It's not part of the original one, but again, they try to add. I don't feel necessarily that this has slowed down the time to market for new portfolios, as your questions was. There were various tax incentives that disappeared, so this slowed down the market. But of course, there has been a slow build-up, and now there's a good flow of deals again, so this is not an issue. In terms of foreign investors, I think the biggest challenge for new foreign investors coming to Romania is, one, the price level is quite high, and two, the portfolios, the big portfolios have already been sold, so the current size of the portfolios are maybe not so incentivizing for, let's say, a new big entrant to come in, and the market is very, very competitive. I don't think necessarily the new directive really helped to facilitate, like Klaus was saying, the idea to make it more competitive, to bring more players in. I don't think it really has helped. It didn't really help, but it did cause more administration for all the involved parties.
Yeah, thank you, Georg. My question was also related to the fact that, but we will speak later on the Italian market. Due to the fact that Prelios has developed the Italian leading NPL markets, Blinks, we have seen a quite slowing down, the transactions slowing down because of the new market, the Secondary Market Directive, because of increasing costs, administrative and regulatory costs in Italy, and this slowed down the NPL transactions, at least for some portfolios, unsecured portfolios, for example, where smaller investors are mainly involved in this kind of transactions. From Romania back to I mean, Michela and my home country, we come back to Italy. And Michela, you are the Secretary General of UNIREC and you represent over 180 members. And Prelios, as said, is one proud member of UNIREC. Italians do it better, we used to say, and we did it better even on the Secondary Market Directive because we have a so-called dual track model. Because in Italy we have collection companies regulated by the Italian Ministry of Interior, and we have the new servicer under the new regulation. How is it working? How is this dual track, dual model working in our country? Michela?
Thank you, Francesco. Well, Italy has chosen, of course, to transpose the directive in its own way. Not sure it's the perfect one or the effective one. On the one hand, we have to take into account that maybe the Italian legislator had to find a balance between the need to transpose the directive, which was an obligation, of course, and the other need, which was to preserve the domestic market. Because the Italian domestic market was already well developed and had significantly contributed to the risking of the banking system in the last few years. So they have tried to save most of the existing system, at least the role of the current players, as you mentioned, the ones who are under the supervisory authority of the Minister of Interior. On the other hand, they have, for example, made some peculiar choice. For example, the Italian legislator has decided that both unlikely to pay and past due credits do not fall under the scope of the directive and in the transposition version. And I'm not sure this will not lead in the future to an infraction procedure. The dual track, well, we can just talk at present with little or no experience of the new system in function because there is only one Italian company, as you certainly know, which has the new license as NPL credit servicer, while there are two German companies which have used the passporting mechanism to have the Italian license as credit servicer. In my opinion, this is also due to the time gap, because because of the fact that when the proposal at European level of the directive was made, the volume of NPL was very, very big. But the legislation has come into force at a time when NPL volumes, at least in Italy, are very low. And since the requirement for having the new license are very expensive, I think that it is not justifying for many companies the investments, the huge investments to require the new license. And this is also the reason why the market is slowing down, as you said, because you have to have the license to manage some portfolios, but no one is asking for this license, and to have an SPV or to have a financial intermediaries as a third party acting as credit servicer according to the law is very, very costly. Yeah.
Thank you, Michela. And so you were the third taking the floor, and you are the third saying that the directive is slowing down the market. Unfortunately, we don't have the representative of, we don't have with us the representative of BDU, which is the German Association of Collection Companies, but Klaus, again, as president of FENCA, knows the market better probably than the Germans itself, I would say. And so, Klaus, I find it quite interesting because, as Michela said, it's true that the first true Italian servicer under the Secondary Market Directive are German collection companies. But on the other side, as far as I know, not all members, BDU members, as far I remember, they are over 480, as far as I remember, have applied in Germany for the license under the Secondary Market Directive. So what's going on in Germany? Is the German situation but then easier than the Italian one? Because if Germans are moving to Italy, they already obtained the license, and probably we will be invaded, so to say, by German servicers. Klaus, can you please explain to us the situation?
Well, I don't think there is a fear for an immediate invasion right now from Germany to Italy. But it's true that, and I mean, BDIU is the largest European association in the market. They have 434 members. I think the challenges that we've seen in Europe is actually, or in Germany, is actually a bit more than what you've seen in Italy, because Germany is one of the countries who already had an existing licensing regime. So they already had regulation that dealt with supervision, that dealt with fees. There was a clear structure. There was already a supervisory authority, and so on and so forth. Now, what has happened in practically all of the countries who already had an existing license regime, they all fall under the Ministry of Justice. Now, the way the NPL directive has been implemented, also in Germany, it now falls under BaFin, which is the Financial Supervisory Authority. So again, good existing working regulation has come out of place and been replaced by, let's say, more of an experimental regulatory framework. And the particular problem is here, and it depends a bit from different countries, but some of the countries who have already a license system, the problem is that until the portfolio is sold, it falls under debt collection regulation. The minute it's sold, it now falls under the directive. That means supervisory authority changes, legislation changes, license requirement changes, and then that makes it more difficult. So yes, out of the 434 members that BDIU has, only 30 have applied for a license. So again, we've seen quite a significant reduction of the market. And it's important to remember that those who already had a license as a debt collection company had to meet stricter requirements that you do as a credit servicer. So you basically reduced the market by more than 90% without adding any extra value, at least if we look at it from a credit servicer perspective. So these are some of the disadvantages that the transposition have had. The impact on the German NPL market, it's yet too early to say, because the NPL market is not only affected by national legislation, but also by macroeconomic tendencies. But the expectation is that it will not lead to the desired increase. And due to the immense administration that has now been added, it is also not something that, from a banking perspective, will affect the prices positively. So again, it is in contrast to the intentions of the directive. And I can say, just for comparison, that situation in Germany is exactly the same as in Denmark, as in Sweden, as in Finland, other countries who also had an existing licensing system.
Which, in my opinion, is at least, let me say, a good news, because at the end of the day, we could reach a level playing field all over Europe, but in the wrong direction at the end of the day, probably, right? Because we are experiencing all over Europe the same issues, the same problems. Unfortunately, opposite to the one we would have reached according to the first idea of the directive. But I would like to have a question for all of you, but we have been discussing so far about regulatory burdens, costs for applying for the license. But according to your idea, in the directive, it was established not only the idea of having a new class of servicers under the Secondary Market Directive, but we also had, because of the Secondary Market Directive, the implementation of the so-called EBA NPL template. Do you believe or feel that also this kind of regulatory reporting is impacting the idea, the servicers, their willingness to apply for this directive? Because in my experience, at least on the Italian market, but probably Michela can share her views due to the fact that she represents Unirec, we have this kind of issue not on data reporting, I mean, not only from servicers, but even from banks, because they have to adapt and postpone the ITC and modify or improve their IT systems in order to report all the information under the Secondary Market Directive or the EBA NPL template to European authorities. What is your view, Klaus, Georg, Michela, and Carlos? If any, obviously.
I can start from a European perspective. I think that is probably one of the things that it was actually a very good initiative, was to have reporting on the European NPL market. And we also had, from Fenker's perspective, a very good discussion with EBA to make the templates not too over detailed. The starting point was to report on an individual loan by loan basis, and now it's on portfolio level. So licensing requirements are far more an administrative burden than the reporting. At least that is how it was thought to be. Because again, we will see that in the national implementation, there are countries that have decided to go a lot further than what was actually suggested by EBA. So if we just look at the EBA template, that is actually working quite well. We've had a good dialogue with EBA. But the problem is national implementation on this issue, because in some countries, far more reporting is required. And every piece of administration will drive up the cost for the purchaser and should, in the most positive scenario, best case scenario, not affect the prices, but in all other scenarios, affect them in a negative direction.
Carlos, Klaus mentioned that, and also Michela, they all mentioned that their countries or each country is implementing the directive in its own way. And Spain is going to implement the directive, and one of the main topic or administrative burdens, which we also have in Italy, honestly speaking, is the paper notifications, physical notification, which are mandatory to the borrowers once the credit servicer is in charge of collecting the loans. What do you think about? Is this, we are in, as far as I remember, at 21st January 2026, and we are still talking about physical letters and physical notifications. As far as I remember, in Greece, they have implemented a completely automatic system, and the notifications can be seen by borrowers just logging on a governmental platform with their ID and password, as the same we have in Italy. Every citizen in our country has its own digital ID, so to say, or something like that. What do you think about the idea of Spain to implement the directive and ask for physical notifications to the Spanish borrowers?
Yes, actually, we have a lot of discussions with the government during the period where we can provide our vision on the draft before moving to the Parliament. And this was one of the main points of our discussions. The issue actually starts already in the directive. The directive requires that a receipt or proof of payment must be provided to the debtor for every single payment. That obligation is reasonable and aligned with transparency. The problem is how this obligation matches with our operations. No? And the Spanish draft law states that the proof of payment must be sent on a durable medium. And if there is no email address available, the only legally valid durable medium becomes physical paper. And we usually don't have email address of the debtors. That means that for every installment, for every partial payment, and for every negotiated repayment plan, the servicer will be forced to generate and send a physical letter if the debtor has not provided an email address. And in a market where millions of micropayments are processed every year, this is a structural issue, not a marginal one. So from a operational perspective, this changes the entire cost model. Printing, enveloping, postal services, tracking, storage, compliance verifications become mandatory and repetitive, I would say. So in practical terms, this could increase the cost to collect by easily 15%, and even more in highly granular portfolios where payments frequency is high and ticket size is low. No? But beyond the cost impact, there is a deeper contradiction, and I'm finishing. Physical mail is slower and less traceable, no, in real time, let's say, in real time, and less sustainable than digital channels. Digital receipts are fully auditable, easy to store, and cheaper. So the paradox is that a rule designed to increase transparency and consumer protection could end up reducing efficiency and harming recoveries simply because of the chosen medium. So.
Yeah, I totally agree with you, and this is probably not compliant, also in my humble opinion, with all ESG legislations, because in order to send digital physical letters or physical notifications for every single installments or for every single communication to thousands or even millions of borrowers can cost a lot of money, and sometimes especially for small installments, probably the cost of sending the digital letters might be even bigger or more than the installment itself. Michele, unfortunately or fortunately, depends where we look at, which point of view we look at, we have the same situation in Spain. Unfortunately, because we have the same burden. Fortunately, because we are not alone. So
yeah, I think
with this not so clever, so to say, solution. What do you think about, could, in your opinion, a digital solution, a digital platform, a digital portal, whatever, or all the digitalization our government or the Italian government is putting on the ground, could digitalization and new technologies help? Because at the end of the day, we need to have a durable, as Carlos said, proof that of the letter, of the installment, of the notifications. Could technology, or do you think that technology might help and reducing cost? Because at the end, in my opinion, if we increase the administrative costs, probably we are going to reduce the purchase price of the portfolio and then slowing down once again the market.
Well, I completely agree with Carlos. We had a harsh discussion with our authority on the issue of the receipt for each payment of the installment plan, because it's very, very heavy from an operational point of view. And I think that digitalization would be a solution, especially for those who are paying to those having a platform or a website where the debtor can enter and see the receipt. Of course, it's a matter of diffusion of, I would say, digitalization literacy, because as you know, our country is not so high in a diffusion of a digital culture, especially in elderly people. So this is an issue that I think we should discuss with the government and with the authority and Bank of Italy in the next few months. I also hope that this is something we can discuss at the European level with the review of the directive and the weight of its impact at national level, because I think we could have something like the receipt for the payment when the payment is finished, not for each payment of an installment plan, because it's too
costly,
too heavy and too costly. Even if I know that the authority doesn't care about the costs that players have to face when dealing with their own business, and it's also due maybe to the fact that more and more this directive has become a debtor protection legislation rather than development of a secondary market during the parliamentary ether at European level.
Georg, I come back to you. Michela just said, because of, or spoke about consumer protection according to, or as a side effect, or one of the effects of the Secondary Market Directive. Are investors, national or international investors in Romania deterred by entering or working in your market because of consumer-related sanctions in your country? Are you experiencing this kind of side effect or from the regulation in your country?
I think the regulation doesn't help, and it's not only the regulation, it is the fact that sometimes the regulation is quite, let's say, unpredictable. And this is not only for NPL directives. We can give a good example of the VAT. The VAT was raised last year in Romania. It was announced 2 days before. So it was announced, let's say, on a Friday, and Monday everybody had to be able to change the VAT from 19 to 21%. This is, short, unpredictable changes in the regulatory environment, of course, makes a new investor think twice. Is it worth it to come? Are the profits there? Is there enough volume for me to make sense? And over the years, we have seen several. The most famous example, I think, was in 2018, when basically on 18th of December, it was announced that if you buy a debt, you can only collect double the purchase price. Yeah. So if you paid €5 or 5%, you can only collect 10% on each debt. And this law went through actually, yeah, in 2 days, 3 days. Yeah. So this was the Christmas gift. Of course, it was challenged in the Constitutional Court. The president never signed it, this legislation, so it died. But it shows you a good example of how you're ready to take your Christmas break. And Q4 is the busiest period for any transaction. So there were probably many deals in place, and you say, okay, how can we invest and be sure that we are protected when you can have laws like this? And it wasn't clear from this law if it's from future purchases, or also it can be applied on retroactively on existing customers, on existing portfolios, which didn't pay in full, or let's say have paid and you have to pay money back. So yes, I do believe that for investors, I don't like to use the word deterred because it's quite strong, but I think there is awareness and you have to be careful when investing, because the legislation can move very fast and can be very drastic in the country.
Yeah, it can be very drastic, and just not to let you feel alone, we had the same tentative in Italy, right, Michela? There was 2 years ago, 1 year ago, I do not remember any longer because I'm getting older, but nevertheless, the problem was that we had a legislation proposal that the collector could not collect more than 20% more than the purchase price, right, Michela? Or something like that. But there was a collection cap, so to say. Michela?
Yeah, it was a proposal of the current Minister of Economic Development,
Oh, yeah,
and
right.
yeah, and we had something to do in that case dealing with this proposal. I know that Carlos has to deal with something similar in
Ah,
Spain. It was supposed that before purchasing the portfolio, the creditor had to ask the debtor to buy its own debt, only
at the
paying
same price.
20%, yeah, markup
Ah, okay.
to the purchases. Proposal. So it would have been a mess because I mean, the base was you had to communicate and be transparent on the price you were selling the portfolio or the credit, and so. At least at present, the proposal is no longer debated at Parliament, but it's still there. So.
Yeah, probably this proposal in our country will never be or will never be put in place because, as you probably the audience already knows, in Italy we have or we had in the past the so-called GACS securitization schemes, and the GACS securitization schemes sees the Italian government as of guarantor for the senior investors of these transactions. So if the investors could not collect all their own money, probably the government would have done called or asked to put some money on the table, and probably this was one of the reasons why, maybe this is my opinion, and we are probably one of the reasons why this kind of proposal has never, also because of the rebellion, so to say, of the creditors of Unirec and whatever, of the market participants, never saw the light. Klaus, I come back to you. We are almost going to 50 minutes of our discussion. And once again, as president of FENCA, what do you see as medium to long-term effects of the NPL market? Some of the directive on the NPL market, some of these effects have already been discussed, and I can say that we have a real European Union because we see all the same aspects. But what do you think about the effects and medium to long term if nothing changes?
If nothing changes, I don't see a lot of positive impact on the market, or on the contrary. I do have to say, just comment on a few of the things, because there are many details that we could comment on later on. For instance, a durable medium that was mentioned by Carlos earlier on, in Denmark, it is actually accepted that is a portal solution. So if you log on to a portal, you have access to it because it is eventually stored on a hard drive, so you don't need to do it. And we're moving entirely away from any, in Denmark, moving entirely away from any paperwork being sent out. So everything is digitalized. And I think that is probably one of the biggest problems that we see with the directive, because what I often hear when talking to consumer associations and so is that this market is unregulated because there is no pan-European regulation. However, the problem is there is a very different infrastructure in the different member states that applies to the use of digital information, that applies to how easy is it to track and trace the debtors. It applies to how are you allowed to communicate with them. It applies to how is the court system working, and so on. That is also why the passporting system is not going to work. Because if you want to have a pan-European system in this matter, the only way you can do it is by aligning the infrastructure. And that is quite a significant change. In Sweden, you know everything about everyone. You know about their income, you know about their household, you know about their debt levels and so on. You know a little less in Denmark, but you know where everyone lives. In Germany, you have to ask the different cities who has moved to the city and away from the city. And normally when I talk to Michela, I get the impression that in Italy, no one knows where anyone lives. So that is quite a significant difference in the infrastructure. I would also say we need to come back to the main point, which is the reason why the Commission wanted to develop the secondary market is that it is good for both consumers and small businesses in general. And I also have to slightly disagree a bit with what Michela said on consumer protection, because I think it is important to notify here that the directive actually specifically speaks about vulnerable borrowers. At the end of the day, the 90% of consumers feel the impact of the 10% of the consumers who do not pay on time. So the 90% who do pay on time are normally those who are affected by it. That means if we don't get the NPL market to work, that means more financial resources tied up for solvency purposes, less access to capital for purchases of house, supporting small businesses, and so on. That was the reason why they started with this. I also don't think that the reason why it's not working is necessarily due to protection of vulnerable borrowers. I think it is basically a misunderstanding of how the market works. Because let's take one example that is in the directive again. If you use a subcontractor, that subcontractor, even though they themselves might be a licensed credit servicer, are not allowed to hold funds. In many European member states, the ability to repay your debt as soon as possible is actually seen as debtor protection. So in this case, in many cases, actually, this directive is not creating more debtor protection or protection of vulnerable borrowers, but in many member states, it has actually reduced it. So now we have a twofold regime. Some countries already had the opportunity to have independent official supervisory authorities. Now with the directive, each company has to handle complaints themselves. So I think it is basically, it has to start with first, fundamental understanding of what was the purpose of the directive, and secondly, why was the purpose of the directive as it was? And then as soon as we can agree on that, that is when we in Brussels can move on to have a sensible discussion on then how do we fix that what is not working right now. Because again, I think it's also important when we talk about the implementation. It doesn't help to have an NPL directive that should develop the secondary market, where when you see legislative proposals in Italy or Spain, that is basically going to, if not destruct, then severely hamper the secondary market of NPLs. So that will be the discussion moving on forward.
Probably on this point, too much. Probably the directive gave too much power, so to say, to every single to every single country to modify the directive according to specific legislations or country-related markets, and this was probably put too far from each single market. This is my view. There is one more point. The directive or the idea to implement or to let the secondary market grow is good, in my humble opinion, not only for companies, SME, borrowers. At the end of the day, is good for the whole financial system. system. As far as I remember, the first time I saw or I read a document from ECB, it was 2017, there was a paper from John Fell, which is Deputy Director General at ECB, and Edward O'Brien, and they theorized and they wrote a paper from ECB arguing or supporting the development of the secondary market in order to make it easier and more effective even for banks to sell at the right price their loans, because otherwise, if banks cannot collect their money properly or get the right purchase price when they try to sell the portfolio, probably they will slow down the lending processes, because as you Klaus said, at the end of the day, the mistakes from 10% of borrowers will impact the 90% of the customers, not borrowers, then customers who pay their installments properly and on schedule. So this is one of the side effects of not having a properly working secondary market, at least in my view. Michela, in Italy, we have a servicer, according to the secondary market, cannot buy loans at the end. And even the collection companies regulated by the Ministry of Interior cannot buy non-performing loans any longer because of the new market directive. What do you think about? Is our market too strong and puts some risk for Italian collection companies, or the risk of once again slowing down or further reducing the number of market participants?
Well, honestly, I don't think it's a matter of the directive itself in this case, because it is somehow just formalizing in terms of rules a situation already existing in the market. New NPL players under the supervision of Bank of Italy will act as servicer, and the existing player, the 115 companies, will act as their providers. It's somehow leading to a systematization, I would say, of the chain of credit management in Italy. And the key will be the specialization of this servicer provider for the next years and to stay on the market. The issue of buying, I mean, I'm quite sure that the market has understood the impact of this different regulation. Not sure that the authorities themselves have cleared the impact on the current system, but I wouldn't say it is somehow killing the model. I see it as a constraint in terms of organizational point of view rather than a prohibition, and it seems to be a push aimed at separating the servicing for third parties and the role of purchaser, because they have liberalized the purchase of credit, which are no more a reserved activity for banking players and for financial intermediaries, but of course they have to respect some subsidiary requirements. So I think it's just a way of pushing to the creation of SPVs and so on.
And other financial intermediaries. Thank you, Michela. In the meantime, I see some questions flowing down or coming from the audience, and then due to this or due to that, I would like to have a crossfire, so to say, questions. In my understanding, the idea or the goal of the Secondary Market Directive was, and we have been discussing so far about that, was to implement, to let the secondary market grow. Are we going or are we approaching this goal, or are we seeing, or are we, as side effect, pushing out small players out of the market? And then we have the risk of having just 4, 5, 6 giants, so to say, European champions on the market. So going in the opposite direction as expected by the European regulators. It's a crossfire question, so the first to come.
Okay, I think if we look across Europe and we look at the number of credit service applicants, there is no doubt we are pushing the smaller ones out of the market, without any question. And I have yet to see a jurisdiction where the opposite, or a member state where the opposite is possible. Will that going to affect the NPL market? That is difficult to say. But in terms of whether or not it's going to be increased, or we see a reduction, there will be a reduction of credit services post-directive implementation compared to prior implementation.
Georg, Carlos, do you have any idea or even a different idea from the president of FENCA? If any?
Actually, one of the main concerns of the Bank of Spain, which will be the supervisor, is how many players will ask for the license. How many of the actual players in Spain? I really don't know, but I'm sure that it will be a less number than the actual players. So there were fewer players acquiring debt from the date of the law into force. So I'm sure about that.
Which is not far from what we have seen in Italy, as said.
And I think that it doesn't match with the purpose of the directive. So,
Michela, Georg.
Yeah, I agree.
Because
I mean, it's the same concerns of Bank of Italy. They wanted to know how many players, existing players, would have applied for the new license. They expected to be the entire market applying for the new license. This, of course, didn't happen. I've got the impression that the directive has failed in the objective of expanding the secondary market in these terms, but we are just, we are, as I mentioned before, we are seeing the existing situation just being somehow consolidated by the directive, and we are seeing a consolidation of players in the market.
Okay, so we have one more side effect, disappointment from national regulators on the numbers of people or companies applying for the new license. We have a couple of questions, but I would like to close our discussions with Klaus. Klaus, by end of this year, we have to start, or the European Commission will start working on renewing, upgrading, improving the directive. Yesterday, probably, there is also the European Commission is now appointing the new NPL advisory panel of the European Commission. And what are the amendment that you as President of FENCA would put on the table to the European Commission, to the European legislators, in order to improve and to correct some of the mistakes or side effects we have been experiencing with the first release of the Secondary Market Directive?
Yeah, it's a good question. First of all, on the NPL advisory panel, I will also be representing FENCA on that panel, which is the first step.
We will meet there over there then.
to the revision. I think as of right now, there are many details that we could discuss with them. I think the overall point is going to be that the NPL has, as Carlos said, achieved the exact opposite of what was intended. And it is important to have that conversation first. The way that FENCA will approach it is that we, throughout 2026, will have a conversation with all the national member associations. So that includes UNIREC, ANRECO, that also includes AMCC from Romania. So all the national associations, we will have a discussion to see what has the impact been in those countries so that we can give the right numbers to the Commission. But I think the starting point is this is what we set out to achieve. This is what the Commission purpose was. It has not been reached. What has affected it, and where do we start? Because there is no doubt there is the administrative burden in general. That is a problem. One thing is reporting, but more acquiring a license is difficult. Then there is the whole discussion that both Carlos and Michela and yourself commented on, which is that in some jurisdictions, due to national implementation, the amount of paperwork that needs to be included on micropayments, on installments, and so on and so forth, is basically creating a significant overhead cost. And I think it is important to remember that I think for once in this Commission cycle, we will see that they do have an interest in the cost to the industry for one particular reason. The cost is affecting the price of the NPL portfolios. And the overall objective from the first discussions regarding a unified trading platform across Europe in 2019 and to the implementation of the NPL directive, the hope of the Commission have been that more banks will sell their portfolios, obtain higher prices, and keep supporting European consumers and European businesses. That is the objective. So when costs go up and prices are negatively affected, then that is something that is counterproductive to what they wanted to achieve.
One question from the audience, and then I think we are over with the time. We are discussing about, or we have been discussing about standard or common level playing field at European level, common legislations, common data reporting, and so on. We have never seeing so far a common insolvency law. Do we think that in the next implementations or in the next review of the Secondary Market Directive, or even at European Commission level, because of the advisory panel, we as market participants, and you, especially you, Klaus, as president of FENCA, can you or we try to push for standardization of, as far as we can, of the national insolvency laws? Do you think that this might help the secondary market on a different or wider perspective? This was a question from the audience.
Yeah, if I remember correctly, there is a separate directive that deals with insolvency. So we will not push for the inclusion of that into the NPL directive. Of course, the legislative discussions regarding insolvency is something that we will focus on. And I can say from speaking on behalf of FENCA, a level playing field, and where it makes sense, also common regulation, is something that we work for. However, it is also important to notice that it is very difficult in our area to find common regulation across all member states because of the different infrastructure that I addressed before. Because what seems to be what is a deregulation in one country is seen as an administrative burden in another country, and so on and so forth. So that will be difficult. But yes, I do believe that insolvency is a separate piece of legislation that is going to be being discussed. And that is something that we will focus on as well.
Okay. Thank you, Klaus. I think that our time is over. I would like to thank you all once again for your kind participation, to Credit Village for organizing this webinar and for having Prelios and me as a scientific partner. I would like to thank all our people and audience from home. Thank you. And Roberto, probably you would like to spend 2 words before closing our
Thank you.
event.
Thank you, Francesco. Thank you. I'd like to sincerely thank everyone who participated. And of course, a special thanks to our panelists and to Francesco, who did an excellent job moderating the first very, very interesting European webinar and discussion on SMD. As Creative Village, obviously we will, of course, continue to follow the development of the regulation and the market impacts, which also will be central topics in our future upcoming events. Once again, and thank you to our scientific partners, Prelios, and our strategic partners, Davis & Morgan and Asset Finding. Thank you very much. Thank you.
Thank you. Bye.
Bye.
Ciao a tutti. Grazie.
Ciao.
Bye bye.
Asset Finding is a 360-degree ecosystem for credit acquisition, centralized position analysis, and data extraction, all in one place. Operational support for debt settlements and credit acquisitions, powered by Casa Italia team, and access to capital through financial solutions developed in partnership with Andrea Bertoni and Davis & Morgan. Whether you are a consultant, a real estate professional, or an investor, the rules have changed. We are among the first to leverage the new Secondary Market Directive and the authorization of Davis & Morgan to give you institutional access to the credit market, an opportunity that until now has been reserved for only a few. The new era of the real estate market starts here.